From $6,000 to $600,000 for doing absolutely nothing, just learning the small multifamily growth formula. And there are grants for multifamily growth. So if you'd like to buy your income for the next 20 years, watch this video. Let's get started. Hey everyone, if you're new here, I'm Rinde from AskRinde, and over the last 20 years, I've worked with investors, landlords, and buyers from all across New Jersey and the tri-state. And my job isn't just to sell homes, it's to help people see growth before anyone else sees it. So I work with everyday people who started with a duplex or small rental and grew their portfolio into millions of dollars. So in this video, we're going to be breaking down a simple step-by-step small multifamily growth formula that you can use if you already have rentals or if you want to scale or sell strategically to level up. So the formula is simple. Buy, add units or potential, increase the value, then refinance or exit, and rinse and repeat the same process over and over again. This is the core formula that I've seen with successful investors over the last 22 years. And as I've been sharing here on my channel over the last several years, you start small with a duplex, a triplex, or a 4-unit. And you don't just buy and hold that property and live rent-free. You look for ways to be able to add value. You actually want to increase the value of the property by positioning the property correctly. Most people look at what's already built and what they can see, but smart investors look at what's possible. So there are 3 ways to start getting small multifamily properties. Number 1 is to buy and purchase the property, but not just buying and purchase the property, because in real estate, you make your money when you buy, not when you sell. So you want to actually work strategically with the right agent, the right source to be able to find you the right type of deals. As I shared earlier, there are DSCR match ready deals that we work with. The DSCR loan is a debt service coverage ratio loan, and this loan gives you the ability to be able to get into properties and buy and scale and get more properties without having to actually be personally liable for the property, because the property itself qualifies you to keep buying more property. So it's a very unique loan type, and finding the right deals where the income exceeds the expenses, where you can actually easily get qualified for a DSCR, can lead you to be able to get more properties consistently. So it does matter who you work with. As an agent, you want to make sure that you're working with the right agent who can actually find you off-market opportunities, DSCR match-ready opportunities, and also rent-to-own deals. So buying your multifamily, you need 3 things. Number 1, you need a good and strategic location. And number 2, you need a minimum 5-year appreciation in that location. And finally, you also need to have good property management, because the lifeblood of multifamilies are rentals. So you need to have good property management and also a great way to be able to source good quality tenants to keep the flow and the cash flow and the money coming in, as well as making your properties more profitable. The second way to buy small multifamily is to buy them via rent to own. You can actually buy duplexes, triplexes, as well as fourplexes via rent to own. And with rent to own, you don't need credit, and you actually do not need an institutional loan to be able to get into these properties. It's actually a genius way to buy real estate. You can actually buy the property based on terms, and there are many owners from all across the country that own their properties free and clear, and they actually will happily rent to own the property to you, even if it's a multifamily. So think of it this way. What is the biggest issue that landlords have when they're dealing with property? Ultimately, it's going to be the property management. It's going to be the tenancy, because as I shared earlier, having the right tenants and having good cash flow and appreciation on a property can make or break you. So you want to make sure that you actually have the right tenants, because your property is only as good as the flow, the money that it generates on a daily and a monthly basis. So having a rent-to-own strategy included when you're buying multifamily is genius, because there are owners who live in other states. They are absentee owners, and they are having difficulty in a specific market in your area managing their property. And they're not a big landlord. They're not a hedge fund. They're not an investment banking group. They're actually a small mom and pop. They're just trying to manage and keep the properties afloat. And in some cases, it becomes burdensome. So they actually want to keep those properties, but they don't want to have to deal with the headache of managing them. And so their plans may be to sell the property in 4 or 5 years, but they're not just ready just yet. So they would actually happily rent to own the property to you, where you can actually rent the property from them and actually own the property when you exercise your option to purchase it later. But the great thing about it is that you're actually able to own the property via rent to own now and not have to wait later to be able to buy the property. In addition to that, you can also cash flow from that same property. And these are the type of properties that we feature in our 2-for-1 homes or our Section 8 homes list, which you can actually check out by clicking the link below in the description. And the third way to buy multifamily is to use land to start to invest in multifamily. This is actually a very unique and keen way and one of the most profitable, because you can buy a property and a piece of land or a lot for $1,000 that can eventually be worth hundreds of thousands and even millions of dollars because of the strategic location of that land and that lot. So here are 4 key types of land that you can use to start to buy multifamily. Number 1, home and land packages. So as I shared, the formula is based on buying the property, adding units or potential, increasing the value of that, then refinancing or selling the property, and rinsing and repeating the same process over and over again. So with home and land packages is a very powerful strategy to buy multifamily real estate, because instead of buying the finished property, you're buying the land and the build packaged together. So this positions you for the endless possibilities that come along with something like this, which includes not only grants, but also new construction financing. And also you can actually position yourself to be on the ground floor for development. So imagine buying a piece of land and utilizing and leveraging that piece of land or the land and home and land package as actually your equity, as actually your contribution to a larger development, especially if your property is in a strategic location. You can actually get specific grants to be able to help you execute that entire home and land package build out. The second powerful strategy that investors use to get land that gives them multifamily are development potential lots like this one. So as you can see, this property actually was purchased for $1,000. And now, because of this location where this property is located, as you can see, is right along the waterfront. And the property is actually where the star is. You can see that this property is in a strategic location, and this location currently is going through a redevelopment. There is a multi-billion-dollar development actually happening as we speak in this location. But here's something that people don't realize. Acreage or buildable lots in good locations, they still exist, but the prices rise very fast once the development potential is seen. So you want to be working with a group, and you want to be working with an agent that actually can see the potential before anyone else sees it, because you'll be on the ground floor and you'll be in a position to build and actually scale your wealth much faster by simply following the strategy, following the formula, and working with the right group around you to help you strategically buy properties in strategic locations, buy and hold them, add value, add potential. So development potential lots give 2 additional opportunities to use land to actually buy and grow in multifamily. So as we see here, small acreage in a strategic location near transit, downtown, hospitals, or redevelopment zones can not only support small multifamily projects, but also can strategically place you as the investor to scale your net worth. Because in these locations, it's all centered around zoning. So once the zoning plans are approved and confirmed, the values drastically jump, increasing your net worth. This is where we see investors create equity before construction even starts, just by buying and securing these development potential lots and holding on to them. The second profitable way are vacant infill lots. So you see this many times in urban areas in inner city where there are lots in between houses. And vacant lots are one of the most overlooked opportunities in real estate, period, because this is actually a gold mine. Having these properties, and this is why you see many times investors will come from other states and they'll buy those properties and just hold on to them. They'll pay the taxes on an annual basis because they actually know what the 5, 10-year, 15, 20-year plan is. And they have a strategy to be able to use their businesses. They use grants to be able to hold these pieces of land, these vacant lots, these vacant infill lots. And at some strategic point, they may decide to start to develop them, or they may just hold on to them waiting for a larger redevelopment play. So with vacant infill lots, these are lots that are surrounded by existing homes and they're already connected to utilities. So you don't actually have to do that part. And they're normally zoned between 2 to 4 units. So by using these 2 strategies when it comes to land, investors don't buy land, they buy buildable certainty. You want to make sure that when you're buying and investing in real estate, that you're looking at the future, not just now. Because once the zoning changes and allows small multifamily by right, builders and investors, they pay attention. This is exactly why investors work with us, because we're agents that understand zoning, we understand the rights, we understand grants, and we understand the skill that it takes to be able to spot and find these opportunities. And we'll also network with off-market properties. So now let's talk about grants. Grants don't replace your strategy, they actually enhance your strategy. Knowing how to access the right grants, strategic grants, when it comes to small multifamily and using this formula that we're sharing with you can actually enhance your strategy by actually giving you more leverage. Without having to actually find more money, you can actually use grants, free money that you don't have to pay back, and actually execute and level up and grow your net worth. So there are many grant-friendly scenarios in real estate, from 2 to 4 unit acquisition of small multifamily, to first-time homebuyer grants, to city and state redevelopment initiatives, to affordable housing initiatives, which myself and my real estate group are working on currently in New Jersey and also the surrounding states, and also down payment and closing cost assistance grants. So I've seen it help investors utilize all these different grant scenarios. They may start as simple as having a duplex to a 4 unit where they live in one unit, rent out the others, utilizing getting into that property with a grant, and then scaling and moving forward to the next property by actually utilizing grants to be able to buy that property. Just utilizing and matching the different grant scenarios with real estate to be able to grow their portfolio. And as I shared earlier, you can also use rent to own to buy small multifamily, and you can use grants to exercise your option to purchase those properties 2 to 3 years down the line. This is how small multifamily portfolios are run and built into multi-million-dollar portfolios over time. So understanding the small multifamily growth formula, buying the property correctly, adding units and also potential, increasing the value, learning how to refinance or exit the property strategically is the very reason why many investors list their properties with us. When they're going to sell the properties, they come to us because they want to actually level up. They want to actually use those properties as steps for the next level. You want to make sure that you start to learn the processes of multifamily and real estate and using it strategically by actually starting to not only rinse and repeat processes using this formula, but also strategically package and get and secure and hold certain properties that you can actually use as stepping stones to continue to grow your portfolio. So listing the property in some cases with us, they're able to actually not only sell at a huge profit, but they can use those profits in order to be able to enter into the next level of real estate, going and starting from a duplex property up to a 4-unit property, up to a 10-unit property, 20-unit property, 50-unit property, and becoming full-blown developers. So as we share with many of our investor clients, we actually help them to understand growth early. Very strategic and very important, and we like to actually work with you. So if you're serious about building your small multifamily portfolio, learning more about development potential lots, grants for real estate, you need the right data. You need to work with the right team. And this is the very reason why we built AskRinde, to be a source for you, to be able to not only work with and getting and growing your real estate portfolio, but also having the right data, having the access to the right lists, having the access to the right information that's not readily available, but having the connections to these programs. One of the best sources for grants when it comes to real estate for small multifamily are home partnership programs. There are home partnership programs in various markets all across the country, and they actually give money to not only help for affordable housing, but also help small multifamily investors grow their portfolios by giving them grants in order to be able to build out their properties. The goal is to basically create affordable housing and give incentives to those who actually have the product or have the properties to help give them and beautify communities, not only from a beautification aspect, but also have opportunity for inventory that everyone can participate in. They can get access to and actually lift the entire municipality as well as their local initiative and elevate the area. So you can actually check out our grants list to not only see HUD opportunities, but also more home partnership programs that are available for you. So don't wait to buy real estate. Buy real estate and wait, but buy real estate correctly. Work with the right group and actually have the right data in order to be able to make an informed, strategic, long-term decision that will actually set your family up for generations. So if you'd like to actually learn more, get access to the AskRinde exclusive off-market list, where you can actually find properties that are actually strategically placed, that you can actually pull the trigger on and buy strategically in the right way so that you can scale and grow your net worth. Make sure you actually click the link below to connect with us so that we can actually get you on that list if you're looking to buy and grow your portfolio as an investor. If you want to get access to our grants list and start to learn how to use grants strategically with real estate, we'd like to help you. So you can feel free to reach out to me anytime. My email address is AskRindeNetwork@gmail.com, and I'll be speaking more about grants and strategies to be able to use to buy multifamily real estate. So make sure you check out our grants and rent to own playlist. And if you'd like to learn more about how to strategically stack rent to own, grants, as well as small multifamily, make sure you check out the link below, and also share with us your city and your state so we can cover your city and your state and your location for strategic land opportunities. So if you have any questions, please feel free to leave them in the comment section below, and also email me anytime. I look forward to seeing you guys in the next video. Until next time, thank you so much for watching.